Hey, what's up guys? Welcome to the 40 Finance channel. It's been a big week as far as earnings reports and economic reports coming out. And whenever you have times like this where there's a lot of reports coming out, I'm always picking through to try to find out who has gotten hit a little bit, just to see if there's an opportunity to buy in these environments. One of my more popular videos actually just came out a day or two ago, and it was about Intel, who got slammed recently on their earnings report, and trying to figure out if there's an opportunity there. Now, out of all the big names that came out yesterday, we have Google, and Google certainly isn't struggling from a revenue standpoint, but they have definitely struggled a little bit more on the growth side with everything going on with the pandemic. And meanwhile, Apple blew things out of the water, Amazon blew things out of the water, and Google kind of, meh their way into the spotlight yesterday. So that's what we're going to talk about today. Google, and look to see if there's an opportunity on this dip that is developing in the Google stock price. As always, my stock picks and projections are just my opinion for your entertainment. Please talk to a financial professional before taking on the risks of the stock market. But I do encourage you, if you enjoy stock market analysis, personal finance videos, investing ideas, please subscribe to the 40 Finance channel. Thank you to everybody for supporting the channel so far. All right, so when it comes to Google, it's a little bit of a mixed bag yesterday, and we'll go into it in more detail. But basically, they beat the estimates, right? And the estimates were down from what we would normally see with Google, because everybody knows what's going on with the pandemic. Everyone knows that advertising budgets for every company are getting cut, which, trickles down into a problem for Google. So they beat the estimates, but they still showed one of their only declines in their history. And I think the last one was 2009. So while the news from an estimate standpoint, they beat things, there are some underlying headlines that investors are looking at and not feeling too great about, certainly in the short term. All right, so let's take a look at Google stock today. Current stock price at $1466.91. It looked like the stock market, it popped a little bit today, and then it was kind of trickling down around lunchtime Eastern Standard Time. That's where I am right now. And off to the right, you see the year-to-date chart. And if this 1466 number or thereabouts sticks, you're looking at about an September-October timeline of 2019. That's the sort of valuation point that we're at in Google's history. So you're effectively wiped off 6 or 7 months, not including, of course, the big dip that related to the pandemic. So if you were around and call it September of 19 and you considered buying Google but you didn't, you are technically being offered that price right now. So keep that in mind. The 52-week range on this stock is 1013 to 1586. The 1013 obviously happening when things were at their worst in the COVID situation. Current PE ratio of 29.59. And reminder that Alphabet is still looking at things from a growth mode, so there is no dividend here. All right, one of the things that I always like to do is to go back on valuation metrics to get a feel for what is this price today, what does it mean in terms of valuation, and how does that compare to valuations that were offered in the past. So I use this chart from Yahoo Finance. We're looking at things today from an annual basis, dating back to 2014. The trailing and forward PE on this chart do not get updated in real time like the like the previous slide, but you can see trailing PE of 30.52. If we go across the board back to 2014, we're still not seeing an immense value. We're kind of seeing that it's cheaper than it was in 18 and 17 and 2015, but it's not some, unbelievable sale in Google's history at this dip. Forward PE, as a matter of fact, is running hotter than it has been over the past 5 years. My guess on that is going to be that most of the projections anticipate less revenue, so this is sort of a negative comp couple quarters for Google from a year-over-year standpoint. So obviously the forward PE is going to calculate less revenue, and that is going to affect how much you're paying for future revenue. Taking a quick look at price to sales and price to book, and again, there's nothing here that says, wow, this is, the cheapest we've ever seen these metrics since 2014. So while the price is dipping from a valuation standpoint, I wouldn't call this a fire sale. All right, so obviously Google comes out and, has a negative comp year over year. And so it's always interesting to see how analysts respond to that. I use tip ranks to kind of track analysts. It's a cool paid service. I am a paid subscriber. My affiliate link is in the description if you're interested in checking out the service and potentially supporting the channel. But always after these earnings reports, it's real interesting to see, like, hey, how did the top performing guys and girls come and how do they react to that? What do they say when they look through the earnings, and what is their latest analysis? So normally I come on and I show the sort of averages across the board, but since this just came out yesterday, I thought I'd do a highlight of these exact names and faces that we have here to get a feel for how things were going. And you see these are all top performing, 4-star plus analysts, which in tip ranks world just means, that they've been tracked, and I guess you could trust that a lot of their projections in the past have come to fruition. So we see, just eyeballing through that middle columns that I have highlighted in green, you got a lot of 1700s. You got, some 1600s, some 1800s. My eyeball average here, I'm going to say 1750. So 1760, since it's sitting right there at the bottom, is a 19.92% upside from where we stand today. So somewhere over the next 12 months, the consensus is that Google has about a 20% run in it, at least from an analyst's point of view. And this is all fresh off of the earnings report yesterday. So 20% run, which sounds about right when you think about Google. From a comp standpoint, next year is going to be very easy, assuming that COVID goes away. But they've got the benefit of the comp for next year or over the next 12 months. The catch is, of course, what happens in Q3 and Q4. Holiday shopping season could be dramatically different this year. Absolutely dramatically different. That's going to be a key time to see if you don't get advertising revenue back up to a really high place in Q4, you do not want a negative comp Q4. Okay, you probably get away with it in Q2, maybe in Q3, but a negative in Q4 would be a real killer. For a company like Google and a company like Facebook would pretty much be in the same boat. All right, so just a quick look here from the Alphabet, official PR release of their results, and I just highlighted a couple quick things. When I say negative comp, you look at the top line here, revenues down 2% year over year, so minus 2%, same quarter in 2019. Now, we're still talking about $38 billion, right? So nobody's worried if folks are going to be able to eat and sleep at Google. There's plenty of money coming in. But again, there's a lot of focus on growth in this market, growth and momentum. So when you see a minus 2%, it doesn't necessarily do much for me. It doesn't shake me up a whole lot. But if you think about the growth and the momentum trades that are being made in the stock market right now, I could see some instability in Google's stock price going forward for the next couple months. And down at the bottom, diluted EPS, I mean, it's just an interesting way to look at things because the share price is up higher than where it would have been last year. Earnings per share obviously are down from $14.21 to $10.13. So keep that in mind. All right, going to get into a little bit of an eye chart on this next slide, but I wanted to kind of break down the revenues by channel or by category in Google's world and talk about what we're seeing and what we can expect for the future. This is all guessing on my part, but as someone who's been in digital marketing on the corporate side and ad buying side for several years now, Google is one of my favorite stocks to look at. I feel like I'm very confident in the world that they live in. So let's jump in and take a look. So again, this is digging deep. This is categories of revenue, traffic acquisition, number of employees. We're going to focus mostly on the revenue here. So at the top line, where there's that first red ding, you got Google Search and Other, and you see that that is down $2 billion. So $23 billion, give or take, versus $21 billion in 2020. And then I made my own thing here, and I'm like, well, let's look ahead and think about this. What is the growth opportunity? And I'm going to say mediocre. Just for my own, just seeing what we're seeing with Google search and advertising, I'm going to say that's a mediocre growth opportunity for the long term. YouTube ads, on the other hand, which is your second line, and I got a green check mark over there. 2019, you were at $3.6 billion. And YouTube ads actually went up, which is great. I personally thought that they would go up more than that. Just thinking about people sitting around watching YouTube cord cutting, to be honest, I was a little disappointed that it only went up that much, but at least it's up. You still have, with YouTube, you're still facing a reversal of ad spending by the advertisers, so maybe that had a lot to do with it. Growth opportunity, my personal opinion, huge growth opportunity for YouTube going forward when we start to think about, cord cutting, video consumption. I just think YouTube, that's going to be a machine that runs for at least several more years pretty efficiently. All right, Google properties, this is kind of like network-owned properties, down year over year in Q2. I don't know a ton about Google properties and network members properties. I'd have to dig in more, but if it's anything like search or AdSense type plays, I'm going to say mediocre growth opportunity there. Going down a little bit to the cloud line item, $2 billion in 2019, turned into $3 billion in 2020. That is great. If this was a small company, then certainly an additional $1 billion in revenue is going to be a good thing. Again, though, some of these Microsofts and Amazons that are out there are really kicking ass in cloud. And I think Google needs to push this envelope a little bit more. However, the long-term growth opportunity is very good. Then you have the Google Other revenue line, which is a convoluted one as well. I believe it includes things like Maps and Nest and App Store, things like that. So you can see that they jumped from $4 billion to $5 billion. I think this has a lot of potential downline, assuming it includes the App Store and Nest. So I'm kind of, just to be fair, I'm banking that that's where those two fall. I'd have to dig deeper into that line item, if even possible, to figure out what they're including there. Skipping ahead down to the bottom, we got total acquisition, traffic acquisition costs. So it was nice that Google saved a couple bucks in this department. not quite $1 billion, call it, let's say, $500 million. So whatever they were paying to acquire traffic, whatever sort of license fees and stuff, they saved a couple bucks there. And then also encouraging number of employees, plus 20,000. The reason that's encouraging, even though it costs the company more, is just that, you know, a smart company like Google is still signing on new people. That's important when you talk about technological development, sales. If you're not adding staff there, then I start to get worried that you're not pushing the envelope hard enough. Then all the way at the bottom, I sort of highlighted that they did approve a stock repurchase. So if you're an investor, you know, stock repurchases have been sort of meh this year. However, it's a tailwind, if you will, for investors because, you know, you get that increase in volume activity over time. All right, so what's the bottom line when it comes down to this mini dip coming out of the Q2 earnings for Google? From my camp, I'm not super surprised. I was a little surprised at the negative comp, to be honest with you, just because ad prices change. I would assume ads cost more now than they used to, but they still hit their estimate. When I think about Google, you know, I think first about the search ads, right? And we know that sports, travel are really getting killed. And when you put all the things that go into that from a search advertising perspective, sports and travel, and there's probably other categories I'm forgetting about too, education, you know, summer camps, things like that, I'm not surprised the revenue was down significantly. What I guess concerns me for the short term is how quickly those things come up. Travel is a monster market for Google and many other people too. I just don't see travel coming back in a big way until next year, and it could potentially get even worse from here depending on how people react, of course, to the latest COVID news. Sports, we need sports to continue somehow, some way, and I'm not asking people to risk their lives, but if sports don't continue, then you start to lose an insane amount of internet traffic, and if you're a Google investor, you should be rooting for professional sports to play their season because you start talking about fan traffic, memorabilia sales, jersey sales, all that stuff. If you're rooting for Google, you're rooting for sports. All right, my next point on the board there, need more out of Google Cloud, bottom line, from a sales perspective. I mean, an incremental $1 billion is awesome. However, you could argue that they should be able to do that in their sleep, right? So the way cloud is growing, I'm sure that they have big plans for the cloud business. It needs to grow faster. It should be like a 50 to 100% all this year alone and continue that pace for a while. Hopefully they're marching towards that goal, but keep an eye on it and let's make sure that Microsoft and Amazon aren't stealing all the cloud business. All right, the next thing for Google is figuring out the next big thing. I think they got some irons in the fire with Nest, which is sort of the Google Home ecosystem. And I think they have some opportunity with Google Maps when we start to get into self-driving cars, things of that nature, not to mention restaurant reviews, travel, insights, things like that. I think Maps has a brighter future than folks give them credit for. And then lastly, brand safety. And this is something with Google that I think a lot of people overlook, but they recognize what's going on in internet advertising. Okay, they understand, the boycotts of Facebook, and some people have boycotted Google. That's easy to do when ad spending is basically on the chopping block as it is. But Google is working pretty hard to offer more brand safety protocols for advertisers. And if they can become a trusted, safe place for brand spending going forward, and they certainly have the network and they have the technology to improve brand safety, it could be a big long-term win. Like it could be a plus 10 to 20% ad spend per year just on incorporating brand safety. It's a much longer game, and it's a trust game, and so we'll see how it goes. But let's just say that Facebook's trust score with advertisers right now is about 0 on the corporate level. All right, so bottom line for me, I still love Google. I like Google at this price, assuming that you're holding for the long term. I don't see anything wrong. Furthermore, if your cost basis is above this price and you're holding long term, then now's a great time to buy, shave a couple bucks off. I do think the stock price could drop a little bit more before it goes back up. And I think Q3 earnings have the opportunity for another dip if things don't go well. And God forbid the Q4 earnings get dinged with a lack of spending due to COVID. Then you're talking about a monster dip from there. But I think if you are a long-term investor right now with Google, I think you just keep averaging down. And it may not go down anymore. Like, we could have a cure, the world could turn back to normal, travel could go up, and then you're talking about a substantial return on investment. That should start next year. But over the next 12 months, if you're long on Google, keep picking it off on red days, so to speak, and this is one of them. And if you're a new investor and you don't mind holding Google for 12 plus months, then I say this is as good a time as any. It's not a fire sale by any stretch, but just go in small, right? It's an expensive stock. Maybe you only buy 1 or 2 shares now and kind of set up your cost basis. Then watch how Google finishes the year and take an opportunity to plug in another share here and there, bring your cost basis down. I think you can get away with that game with Google right now. All right, guys, hope you enjoyed this take on Google stock. Is it time to buy the dip? Let me know in the comments. Thank you, everybody, for supporting the channel. Please give me a like and subscribe. See you on the next video.